Hey guys, it's Anna here. So today I'm going to help you with your taxes. I know taxes can be pretty confusing and it's pretty tough to do and you don't know if you're supposed to file them or what you're supposed to do. So today I'm going to help you guys with this and just explain what you need to do and if you're eligible to file taxes. So let's get started. So first, you have to determine if you're ready or if you are required to file a tax return. You are required to file one if you're a citizen or resident of the United States or of Puerto Rico. Your marriage, like your marital status, age, filing method, income, all affect whether or not you're required or not to file taxes. Even if you aren't, it's still a good idea so that you can get back any withholdings that you paid on income taxes. So for example, in 2014, you would have been required to file taxes if you fell into any of the following categories, and I'll put them like up here so you guys can see them, and just put each list here. So first, you are an individual under the age of 65 whose income exceeded $10,150. You are an individual over the age of 65 whose income exceeded $11,700. You are a married couple under the age of 65 filing jointly whose income exceeded $20,300. You are a married couple over the age of 65 filing jointly whose income exceeded $22,700. You are a married couple, one of you is over the age of 65, you are filing jointly, and your income is exceeded $21,500. You are married any age and filing separately from your spouse and your income exceeded $6,200. You are the head of household, under the age of 65, and your income exceeded $13,050. If you're the head of the household over the age of 65, and your income exceeded $14,600. If you're a widower under the age of 65, your income exceeded $16,100. And if you are a widower over the age of 65 and your income exceeded $17,300. So the next thing that you have to do is determine if your dependent status excuses you from having to file taxes. Dependents are still required to file taxes if they earn more than a certain amount in a tax year. If you're a dependent and you do not earn more than $6,200 in a tax year, then you do not have to file taxes. If you earn more than $6,200 in a tax year, you would have to file taxes. Also, if you received more than $1,000 in unearned income during a tax year, you are required to file taxes. Next, you have to determine your filing status. One of the things you need to do before you can prepare your tax return is determine the status. If you're unsure of what it should be, there's a quick quiz available from the IRS that can help you pick out the right one. There are 5 possible filing statuses that you can choose from: single, married filing jointly, married filing separately, unmarried head of the household, and a qualifying widow or widower with a dependent child. You have to gather all your documents and get organized. Being organized will help you doing your taxes get a lot easier. And gather everything you need to including your W-2s, interest statements, school taxes, property taxes, receipts, and other applicable information. You should also have a copy of your previous year's tax return if you filed one. Form W-2. You will need information on this form from this form to prepare your return. If you are an employee, you should receive Form W-2 from your employer by February 15th. Your employer is required to provide or send you your W-2 no later than January 31st of the tax year. If you do not receive the form by February 15th, you will need to contact the IRS. Form 1099. If you receive certain types of incomes, you may receive a Form 1099. For example, if you receive taxable interest of $10 or greater, the payer is required to provide or send you a Form 1099 no later than January 31st of the tax year. If you do not receive a 1099 form by February 15th, call the IRS for help. Okay, so the next step can be a little bit difficult, so let me go through this a little bit slower. You have to determine if you should use Form 1040EZ to file your taxes. You must use one of three forms to file your return. First, Form 1040EZ, Form 1040A, or Form 1040. Form 1040EZ is the easiest to file, but you should be careful in using this form if your income is close to the maximum level of $100,000. You cannot claim itemized deductions on the 1040EZ, so the closer your income is to the maximum, the more you risk overpaying taxes due to not claiming deductions. Use Form 1040EZ if you meet all the following conditions. And the conditions will be listed over here and over here. So, your filing status is single or married, filing jointly. You and your spouse, if applicable, were under the age of 65 and not blind at the end of the current tax year. You do not claim any dependents. Your taxable income is less than $100,000. Your income is only from wages, salaries, tips, unemployment compensation, taxable scholarship and fellowship grants, and taxable interest of $1,500 or less. You do not claim any adjustments income, such as deduction for IRA contributions or student loan interest. You do not claim any credits other than the earned income credit. You do not owe any household employment taxes on wages you paid to a household employee. If you earned tips, they are included in boxes 5 and 7 of your Form W-2. If you are not a debtor in Chapter 11 bankruptcy case, which there'll be more information, just look it up online then. The next thing you'll have to do is determine if you should use Form 1040A. If you don't qualify to use the Form 1040EZ, you might be able to qualify for Form 1040A. Form 1040A lets you report the most retirement income, including pension and annuity payments, taxable Social Security, and railroad retirement benefits, and payments for your IRA. Keep in mind that if you can't claim itemized deductions on Form 1040A. If you have deductions that can be itemized, you may be better off filing the 1040. Use 1040A if you meet all the following conditions, which will be listed over here. Your income is under $100,000, or you claim income adjustments with only the following items: IRA deduction and student loan interest deduction. Next, you have to determine whether or not you should use Form 1040. If you cannot use Form 1040EZ or 1040A, and you have no other choice to use 1040. You can use 1040 to report all types of income deductions and credits. You may pay less tax by filing Form 1040 because you can itemize deductions and get some adjustments to the income that you cannot get on a Form 1040A or Form 1040EZ.